Hey, selling your practice is likely the largest and most important financial transaction of your life, and you don't get to do it again. Once the deal is done, the big question remains, where do I invest the proceeds? So today I sit down with Nathan Shields, former physical therapy practice owner. I'm going to talk about his journey after the sale, what he did right, what he'd do differently, and the key do's and don'ts when it comes to investing your practice proceeds. If you are thinking about selling or just planning ahead, you definitely don't want to miss this episode. Practice owners, tired of working hard but not seeing the financial results you deserve? I'm Eric Miller, and my best-selling book, How to Become a Financial Beast, is your game changer. Learn how to maximize profits, pay yourself right, and build wealth outside your practice. Download now for free. So, hey, welcome back to the Financial Beast podcast. I am your host, Eric Miller, your BFFF, best financial friend forever. Eric Miller. Thank you very much. In case you don't know who we are, we Econologics Financial Advisors is a registered investment advisor. We help healthcare owners acquire, control, and invest their money so that you guys can, live life that the way that you want to live it, and only see patients because you want to, not because you have to. You can check us out at econologicsfinancialadvisors.com, and of course, please like, share, subscribe, all those things that everybody tells you to do every time that you're on a podcast. So I'm excited today talking with a good friend of mine who I've been on his podcast many times, and I'm reciprocating because, well, he's awesome. And you got a really interesting topic that I think is going to be beneficial for everyone to listen to. So, of course, we have the great Nathan Shields on the podcast.
Hey, what's happening, Eric?
Right there.
Thanks for having me on, dude.
Hey, man.
I appreciate the golf clap. Thank you so much.
Of course. And I also want to thank you for the unbelievable event that you put on a couple weeks ago. I'm sure you guys are probably, it's probably reverberating in the industry. For those of you that don't know, Nate is one of the co-owners of the Private Practice Owners Club. I think I got that right, correct?
You got it.
And they put on an event where they had, over 100 physical therapists, and it was awesome. Him and his partner, Adam, and it was great. Great event. Hopefully you guys got a lot of great feedback from that. So
yeah, well, thanks for being there. You were a large part of it. You were not only a sponsor, but a featured speaker. And so you brought a ton of value yourself. And this is our second year doing the conference. Great experience. Like you said, over 100 owners and practice administrators were there, and not just physical therapy, but occupational, speech, pediatrics, even some cash pay clinics were there.
Yep.
And it was a really cool experience. We want to double what we did this year, and currently have it planned for October 15th through 17th in San Antonio. So you can always check out the Private Practice Owners Club website, look under resources or the events tab, and find out when and where we're going to do our next event. But yeah, 2026 was awesome. 2027, we're hoping to do even better and even double our attendance if we can. But thanks to your support and your promotion of it, it was great.
Awesome, man. Well, we had because we just pondered over this topic for like hours of what we're going to talk about, right? And
so many late night discussions, so many.
It took us like about 30 seconds to come up with this.
I think you said, how about we talk about this? And I was like, okay, if you want to.
Well, I know that you're an investment minded owner, and I think it's always beneficial to talk with people. Obviously, this being a financial podcast, talk about investing, and because everyone, it's a favorite topic for a lot of people. You don't always think about it, but and I do like your viewpoints and kind of your critical eye on how you invest money. And knowing that, not every investment works out, because it doesn't, and you're never going to shoot 10 out of 10 from the free throw line when it comes to investing. So, and of course you've been through a sale of a practice. So you've kind of been through that scenario of having proceeds or a lot of proceeds from a liquidity event, and then trying to figure out what to do with that money. And so we just want to talk about like that, the good, the bad, and the ugly of your investing experience. and, thought processes and such, so that other people, when they do have, because look, at some point in time, everyone is going to have a liquidity event. Everyone's going to have to sell their practice at some point in time. And you really want to make sure that you have an excellent plan of where you're going to position your money, so that it can still provide for you in perpetuity. And I think that's the basis of it.
Yeah, I hopefully me being on this podcast doesn't demonstrate some level of expertise. It's just simply that I've done it. I'm by no means the expert. I like numbers and I like thinking about it. I like talking about money. And so I appreciate your willingness to have me on. If for nothing else, then to be an example of some things that you could and some things that you don't want to do, like learn from some of my mistakes. And maybe I have a little bit of wisdom to share.
Well, let's talk about that. So let's go back to the point where you actually sold, because
Okay.
that is when you were now in preparation for, oh boy, I'm going to get X amount of dollars.
Right.
Okay. What were some of the things that you were thinking about in terms of what I want to do with this money? And what were, like, I know I'm not going to do this, but here's what I want to do. Like, what was your thought process, when we were approaching that time?
Well, I wonder if you let me steer it to even further back prior
Yeah.
to sale. Do you mind?
No.
Based on what I've learned since the sale. Is that cool?
Yeah.
Because coming into the money is one thing. Setting yourself up for true wealth is something that starts before that actual sale. And so one thing that stands out was me and my partner were big proponents and fans of owning the real estate in which we practiced.
Mm-hmm.
And we were fortunate enough to do that in 2 out of our 4 locations. And so we had a situation where we had ownership. I had full ownership of one of the practices, real estate, and then we co-owned the real estate of another practice. And that was semi-intentional. Like when I had bought it, I don't know, 10 years before, 6 years before, or something like that, that I wanted to own some. I thought it was a good move, but not how good, I don't know. I just thought I heard it was good to move.
Mm-hmm.
And so I think it's something that I learned from The Millionaire Next Door. Like I don't know if you remember reading that book from 20, 30 years ago.
Sure. Yeah.
But these guys who owned auto shops found out that their auto shop real estate was worth more than their business 20 or 30 years later, and it pissed them off. Yeah. So taking that understanding, bought the real estate, and then obviously rented to myself, had a separate real estate holding LLC and rented to myself, and over time paid down the balance, and it accrued, of course, in an appreciation. And so when we sold, then I was able to still hold the real estate, and the company that bought our physical therapy practices I leased it back to them. And so I not only gained in the windfall, but also the ongoing income of them leasing the spaces, which was a huge benefit, right? We now have this market rate lease agreement for 7 years. It's actually worth a lot, right? And
sure.
And I continued on like that, but that was the beginning of I shouldn't say the beginning of my investments, but that was something that I was kind of working on in the background. Never really thought about it a whole lot until the event came where we sold and saw the benefit in the asset that I had in the real estate there.
Do you still have that building?
Since then, I have done multiple 1031 exchanges on that.
Okay. Great.
Right.
And you sold it.
The cash flow that came from that has now, the monthly cash flow is now like doubled or tripled.
Amazing.
Since that event. That's more of the rich dad, poor dad concept, right? Just, going bigger and better over the course of time. And that takes time. So we sold in 2018, so 7 years now. And I think I've 1031'd it once or twice, in order to do that. And, it just takes time to be able to do that. So, that was a huge benefit for us. That all stemmed from work that I had done prior to the sale. And then also, prior to the sale, I was doing some investments. I had some cash and made some really bad investments. And I had some financial advisors that were asleep at the wheel and didn't really help me with my investments. They just said I had a portfolio and I was too busy running my practices. So I highly recommend to all the people that we coach now that you find a financial advisor that simply communicates, that is proactively communicating with you.
Yes.
So I had financial advisors where I had to instigate the conversation. Once a year, I'd be like, dude, how's my portfolio doing? They're like, oh, you want to learn about that? Sure. And then we'd go to lunch and they'd say, so what do you want to know? I'm like, no, this is your time to report to me, dude. Like,
Thank you.
you tell me and what is our plan for the next year? And they're like, oh, we just keep doing what we're doing. And I think you're doing pretty well. And I was so disappointed in that. And so if I would look back, those are the two things, like getting into some real estate that you can be a part of and invest in, especially if you're the tenant well ahead of time. But secondly, find a financial advisor that actually helps. Like they're not just they're not, their name isn't just on the paperwork, but they actually have a plan for you and teach you how to save on your taxes and also invest your money appropriately and make changes as they see fit. Like I hadn't experienced that type of financial advisor in the past. Even though I was making good money, I think I've lost hundreds of thousands of dollars a year on that.
Yeah. And I think, you're right. I mean, part of a financial advisor's job, and I get it, this is how these guys, most of them are paid, being one myself. But the service model it was always really, really weird to me, which was like, we'll just meet once a year and just, hey, we'll just take a look at your little pie chart and make sure this is still your little pie chart here. And without really
I wasn't even getting that.
Yeah. Without explaining it.
Yeah.
And one of the basic principles I try to teach everybody is like, number one, you got to know what you own and you got to know why you own it. And I think the job of a financial advisor is to help explain that. This is why you own this and this is what it is. And this is what these are the characteristics of this investment. And this is what you can expect out of this investment, because no investment's not going to have its ups and downs and such. But, I think that's definitely part of the process. And unfortunately, too many people just don't do that.
Yeah. The other thing as it pertains to the sale specifically was I remember talking to my CPA that, hey, I really hadn't involved him that much prior to the sale until like it was happening. Like it was in motion where there were some end dates and all that in place. And I should have gotten my CPA involved sooner. And I don't know, you tell me if this is a CPA thing or a financial advisor thing, but he told me that, if I had known that you were selling, I would have recommended a different type of sale that would have extended the tax impact over years. Does that sound familiar? Do you know what I'm talking about?
Yeah. I mean, there's
just taking it as a one lump sum in 1 year event.
You could probably try to defer it out somehow where you only get a portion, but there are really, look, if you want to save on the taxes of the sale of a practice, okay, you can't wait until after the sale is done generally to be able to do that. If you want to set up any structures at all, and there are some, there's, deferred sales trusts and there's different, capital gain deferral strategies that are out there that you can do to help mitigate some of that. Certain, like I said, certain irrevocable trusts that you can set up prior to that, but those all have to be done prior to the sale.
Right.
Okay. And most people are just trying to get through the sale, to be honest with you.
Yeah. They're looking at it like, hey, I'm putting it on the market. I'll tell my CPA about it later on. Like if I were to give some advice is like, just get everyone involved very soon.
Yes.
As soon as you start thinking about it, if you're going to put it on the market, get everyone involved. Even prior to that, the financial advisor, the CPA, and even find the lawyer who's going to represent you and review the documents well ahead of time, so that you know all your options, and that as things come at you, you have experts behind you to guide and direct and filter and review and all this stuff, because you don't have that expertise. You don't want to be the stupidest one at the poker table, right? You want to have all these people on your side, because you got some real smart people trying to buy your practice and hey, nothing against them. They're going to try to do everything they can to get the best deal out of you that they possibly can, even if it's to your detriment. And so you want to have these people well lined up. You want that team well lined up ahead of time.
That's excellent advice right there. Definitely have the team prepared prior to when you decide to sell. How nervous were you about the amount of money you were about to get?
I wasn't that nervous about it, frankly. It wasn't when I got notification of what I was going to be in taxes. That really sucked.
I bet.
And I don't know if you would recommend this, but one thing that was recommended to me was to put some money in a Vanguard charitable trust to help offset some of the taxes.
Sure.
And that has helped. I've been able, because I use that money for, like, I'm a man of faith. So I use it for tithing. And if my kids go on missions, then I pay it out of that charitable trust. Right. And so that helped deferred some of the taxes. Otherwise you're pretty exposed. I mean, it is what it is. It's your 25% capital gains rate on top of it, plus the state. So
so I don't know if this is a donor advised fund where you just put money in and then got a tax deduction for the money that you put in. Okay. That sounds like a donor advised fund. Absolutely. I think that would be something that a lot of people can do. And how those work essentially is you put a big lump sum of money in there, and it can stay invested. You don't necessarily have to give it away at that point in time, but you do get the tax deduction immediately for whatever amount that you put in. So
if you know you're going to be charitable in some regard, even if it's just tithing,
yes,
it's worth it.
100%.
Yeah, but I wasn't all in all, I wasn't all that nervous about it. I probably should have been more nervous than or I should have been more careful than I was. Like
what was the mistake that you felt you made? Like, what were some of the bad investments that you made?
It wasn't necessarily a bad investment, but we were renting at the time, and we paid full price for a house.
Okay, I gotcha.
Right. And so that's something that there were reasons. And so that was one. I didn't really make a ton of huge investments at the time. I could have been better and more prepared as to what was going to go where and how much of it was going to go in the different places. Frankly, I didn't allocate it super well, but I did start, putting money in, I'd allocate for my 401ks, and I'd do some other investments, and we found some private equity funds that we were part of. They did all right. They did all right, but I could have definitely been better about that.
Yeah. Investing in private equity, people know when you have a certain amount of money, you are a accredited investor and you get access now to these private deals. Just know the stats on those, are probably like a 50% success rate on some of these things. And for any of them, you just make sure you really trust the operator. Like, you really have to trust the operator, because if the operator is the person that's running the money in those scenarios. So we've kind of seen that recently with some real people did real estate deals in 2023, 2024, and then rates went up. But anyway, Yeah. So yeah, you're gonna make
Yeah.
you're gonna make some mistakes when it comes to investing money. That's for
Yeah,
sure.
we're pretty frugal as well as a household. So that didn't really necessarily change how we spent our money. We
Mm-hmm.
didn't like start blowing stuff on cars and everything, magical trips and stuff like that. We didn't get into that stuff.
Yeah.
And what helped a little bit, well, it was a little, this is one recommendation I'll make is if you are going to sell, what do you plan on doing afterwards?
Mm-hmm.
So I sold when I was um, mid to late 40s. Right. So I still got 20 years of like productive life ahead of me. And I was not totally clear on what my next thing would be. I frankly did have another. I also do diagnostics. I'm EMG certified. And so I had a small EMG practice in Alaska at the time. And that did all right. It generated some money, but it wasn't like a full-time gig. And that's where um, I've been kind of working for the past 5-7 years to figure out what's my next thing,
Mm-hmm.
right? I've got some productive life ahead of me. What is my next thing? And part of frankly being a man is like my self-esteem is tied to what I produce. My
Yes.
self-worth is tied to what I produce. And that's been a struggle. Like psychologically, I found some things. I got into coaching and I can make some extra cash there. Again, it wasn't a full-time thing. So I had downtime. So I guess I say all this to help people understand that you do need to consider what your life looks like after a sale. What are you going to do if you want to produce? What does that production look like? Where are you going to find it? Where are you going to find fulfillment? Where are you going to spend your time? You can only golf or play pickleball for so long per week before you actually feel like you need to get back to work, right?
For sure.
And do something productive. So that's something that I frankly experienced. And as I talk to people who are considering selling, that is one of the first things that I bring up. Well, what are you going to do afterwards? Like, what does that look like? And yes, you get this bunch of cash, but if you also don't have some production on the back end, you're just going to whittle it down over so many years and it'll probably go faster than you think. And especially if you make some poor investments, which
Yes.
you probably will, then you need to just consider what that back end looks like.
Yeah. That's really amazing advice. And I'm glad. And I kind of think that you've found, especially with what you and Adam are doing right now, something that's really purposeful for you. I mean, it appeared that way on stage that you really kind of found a groove here, of something that you really enjoy. And I think that that's important that you have to have that because you own a practice, you're going 180 mile an hour. And the day that you sell, all of a sudden it's like, okay, I don't have to worry about this anymore. But what's going to replace that activity that allows you to like get up and go? So that's really, I think that's excellent advice right there. Make sure you guys have a purpose.
And since we're talking about the sale of practices, and I'm sure you guys provide a ton of this advice because you've seen a lot of people exit, is just the terms of the deal are almost more important than the dollar figure.
Yeah.
In the deal, right? So we had been approached 3 times to sell with letters of intent to purchase our practice 3 times before we actually sold. And we recognized that the terms of those deals just didn't match up. Like we didn't want to sell and then go and then live as clinic directors,
Right.
essentially. Right. You do like a 70-30 buyout and, but then you have to stay on at this salary, at this level of production as a clinic director for the company that you just owned. It's like you're stepping back down into the organizational chart. Right. And we didn't want to do that. And then there were some earnout options that were presented in LOIs. And from what I'm hearing, and you probably have your own opinion on it, but earnouts are not the best way to sell a company because those numbers can get adjusted, unfortunately, to your detriment. So earnouts are definitely not recommended. Those are all things that we had seen and said, no, thank you on
Mm-hmm.
before we found the right buyer. And frankly, we said, if we agreed before we got the letter of intent, if you meet these terms, or we said to ourselves, if that letter of intent meets these terms and this dollar figure, then that's something that we'll consider. Right. And that was the only reason why we did sell at the time.
That makes sense. And you're right. I think the terms of the deal are of uber importance. And got to remember, if you guys make a decision to, sell the practice, it's because the game is up. So why would you tie your future income for you to have to sit there and work and slave and fret and worry? You can do all that and own the practice, And so these earn-out deals, I just can't stand because it's rarely that I've seen them work out. Very rarely,
I've had too many friends do something like that where they stay within the organization. And I can understand staying in the organization for a transitionary period of time,
mm-hmm.
right? For 6, 12 months, something like that. But at the end of that 12 months, we are done, right?
Yes.
And people who have had to stay on for longer periods, and not only just to transition, but also to earn the extra, I don't know, 10, 20, 30% that was promised to them at the initial sale, and meet certain productivity numbers that the values no longer aligned. The processes are completely different and they just end up being miserable. I've just witnessed a few too many of those.
Yep. Yeah. And they're completely avoidable. So yeah, you certainly.
I'm sorry, that's not totally in the investment realm, but
that's part of the whole exit process. But I do want to get back to investments. Like right now, when you're investing money, are you more interested in the cash flow that it provides you or the potential appreciation that you're going to get on investment, or is it a bit of both?
So this is just Nathan, right? It's
just
not
Nathan.
It's not sound financial advice by any means.
Promise you right now, Nathan, you are not going to get sued. You're not. Nathan is not a financial advisor, nor is he providing you any financial advice right now.
Right. Please
purely just my own interest.
This is right. So, okay. So I don't have a full-time job. So I am very interested in the cash flow that I'm getting from my investments. Frankly, the stock market has a place in my portfolio, but it's probably small and smaller than my financial advisor would like to see. But not that that's a good thing. Based on what's happened over the past 8 years, I probably should have been much more in the stock market than I was. Seriously.
Yeah.
But I do have, I've done some 1031 exchanges on real estate. I like real estate for some reason. I especially like commercial real estate, not just commercial real estate, but commercial real estate medical offices.
Yes.
In particular, is where I have,
I agree.
Unintentionally stumbled into, simply because that's what I'm a part of. Like most of my commercial investments have some kind of medical component to them, which cannot be outsourced. That's not going to go virtual anytime soon. I mean, people have to be in person for those. And that's why I like it. I like the appreciation of it. I like the tax benefits. And so that's where, my focus is more on cash flow because, like I said, number one, I don't have a job or a salary that's providing for me. And frankly, we can survive on the cash flow from my commercial properties and be just fine.
That's awesome.
And I want to increase those even more as we go down in the future.
Yeah. Yeah. If you start looking at medical facilities and things like that, and I don't know if there's like corporate leases or who owns the buildings or whatever, or who owns the practice inside there. But typically, when you have like private equity groups or big corporations that are just leasing the buildings, I mean, they're great renters. I mean, you're going to get, 5-year to 10-year leases. They're going to renew every 5 years. And you got to remember, these people do not ever want to have any blips on their, they don't want to like have, hey, we defaulted on this or anything like that because it looks bad on them, very bad. So this is why I really encourage people to try to own their practice real estate if they can. It's not always possible. I get that. But if you guys really can, it really is a pretty wonderful source of income long term for you.
Mm-hmm. Yeah, and it's worked out well for us. Like I said, almost accidentally in that regard. So I'm grateful for that, and it's something that I can continue to build off of. So I actually was looking at some of my commercial properties today, looking at okay, when is their lease up for some of the tenants, the major tenants, and when would
Yeah,
be a good time to put that on the market again, especially if interest rates are going to go down, they might be more attractive and
for
come at
sure.
a higher price, and like I can then 1031 exchange those into something that cash flows even more.
Yeah, I love it. What about investing in in the stock market? Do you have kind of a basic philosophy of that? Is that something that you like? What is your kind of
Well, something that
approach
I
there?
learned because I didn't do it was just stick to and like stick to some stock index funds.
Hmm.
Um, I I look at some of the funds that or some individual insurance or individual stocks like I should have in the past put more into just the index funds,
Hmm.
and then maybe you can decide what percentage to put into individual stocks because those will outperform if you pick the right ones, right?
For sure.
There were some that I invested in that I pulled out of that I look at now and they're doing very well, and I'm like, oh, I should have just trusted myself on those. Dang it. And so,
I
yeah.
yeah, I think the basic of that, guys, is look. I mean, in number one, invest. If you're going to invest in stocks and such, you also have to know that you, me, or no one else knows what the future prices are going to be of any of these things. There's some predictability there or probabilities, but we don't know. And buying important, profitable companies, generally speaking, is going to be a positive outcome for you.
Mhm.
You know, and it's okay to speculate. I got a friend of mine that, look, I just bought CCP. I'm like, do you even know what that thing does? Nope, but look, it just went up like 400%. I'm like, of course, he never shows like the losses that they have on the portfolio, but there's room to speculate for sure, and you should, because it does kind of it scratches that itch that people have, but just try not to do it with your safe, like compartmentalize your money. And I think you've done
Yeah.
that.
Yeah. If you are gonna, not that I would give myself this advice, but there are people who want to play in the stock market. Well, if you're going to do that, and this is what I have done with some of my proceeds, is that okay? Now I have this cash. I want to look at this investment vehicle. So I really tried to get into self storage
Yeah,
at one time, and I'm like, I'm not just going to go out and try to buy a self storage unit. I'm going to buy a coaching program that can teach me all the ins and outs of of buying self storage and how to put an offer together, how to do due diligence, how to find it, how to, you name it, all the ins and outs of self storage. So that I'm not just going into it blind. And I'm a big proponent of investing in coaching. It has transformed my life. And that is our purpose with Private Practice Owners Club, is to transform the lives of others through coaching. And so I live that experience myself, and I can't tell you how many thousands of dollars, hundreds of thousands of dollars I spent on coaching to learn more about these areas in which I'm investing or learning about investing. I even have a business coach right now because I have this new idea that
hmm,
I want to put together to benefit practice owners. And he's helping me flesh that out. Right. So if you're going to get into investing after a sale, like, get some coaching, right? There
yeah,
are programs out there that will teach you, not that I'm advertising, but they'll teach you how to be a day trader, or they'll teach you how to invest properly. If that excites you, then invest in the coaching to do it. I frankly get more excited about real estate stuff, and I can see my coaching investments have been more related to what would be real estate investing.
yes. Have you ever done any lending, private lending, or anything like that? uh,
Yeah, I've actually done quite a bit of hard money lending
hmm,
to contractors.
hmm,
And that's something that worked out well for me. Um, and, and, and it wasn't bad. There were some sketchy times,
Yeah.
but you always want to, and there are ways, people who will teach you how to do hard money lending. And it's not all that hard, frankly. You don't need a lot of coaching on that, but, you want to set it up in such a way that you are lending such that if they defaulted, it
You
actually
get-
benefit you.
Yeah,
I mean,
you get
you'd actually, if you could set it up such that you would prefer that they default, then that's a great situation, right? You don't want to get stuck with something that's underwater. So I did that for actually a few years in Alaska. I had some contractor friends that were looking for cash and to build their homes, and we set up some hard money lending, and you can get some good interest return on those, 10 to 12%, and these are usually backed by the hard asset of the real estate, which is nice.
yes.
And so I did do that for a few years, and it worked out.
Anything in like gold, silver, crypto? Have you gotten into any of those?
So if I think my partner Will figured out that if we had invested our money in crypto back in
Oh, boy.
Bitcoin in 2018,
Oh yeah, you'd be worth probably $100
we
million
would
at this
be,
point.
yeah, tens of,
Yeah.
I wouldn't be talking to you right now, Eric.
Yes,
Um,
for sure.
no, I'm just kidding. I'm not above that. So
I wouldn't have blamed you. You'd have been like,
no, I do have a little bit. You know what I've done right now, and you might not even recommend this, but what I'm doing right now is I kind of lost on the getting on early on the Bitcoin bus, even though I got excited about the technology back then, 2019 or whatever. I didn't invest in it, but now I put like $100 a week into Bitcoin.
dollar cost average. Yeah.
Dollar cost, and I've been doing that for maybe the past year. And so I've got some, and $100 a week doesn't mean much. So yeah, that's all I've done with Bitcoin right now.
Nice. You know, I don't think there's certainly there's not anyone. Well, here's one thing I will say. Concentration of the best financial successes come from concentration. Okay. And what I mean by that is, for most of you guys out there that own your practice and your practice real estate, you are concentrated. Most practice owners that were probably at your event or we talked to, 70 to 80% of their net worth is in their practice and in their real estate. And that's where it should be. Okay. So you guys don't need to get so hung up on like diversification or some of these terms that you hear from guys like me right away. Like, I really want you to focus on building your practice, building it up, because you're concentrated. That's how you actually are going to get wealthy. Now, when you actually do have the liquidity event, that's when you start looking at diversification at that point in time, because concentration will create a financial success. Diversification will help you keep your wealth over a longer period of time. And so, I guess that was one of my points is like, just make sure that you don't get too distracted, so to speak, on some of these outside things. Really focus on how to build up that practice, especially right now. Cause physical therapy it's a good business, man, if you know what you're doing.
Yeah. It definitely, you want to stay within your scope of expertise, right? And build that up. And I've found that when I've made my mistakes, it's been a couple of things. When I've gotten outside of my expertise, thinking I knew more than I did, and trusted more than I should have, frankly.
Yes.
And then the other thing was I invested in people that I hadn't gained a relationship with significantly, or they were not in my immediate geography. Like investing in, if I was when I was doing some of the hard money lending, it was easy because I could drive to each of these properties and view the progress on the property at any given time. Where I've gotten really stuck is when I invested in something out of state through a mutual friend who's like, hey, I've got this guy who's doing great things in this other state. He's needing some cash. And so did one deal with them, and it was going all right, but hadn't fully paid off before they came at me with, hey, we could use some more money for this other property. And I I got stuck on that one, frankly.
Yeah.
I lost some money, and I'm still dealing with it 2 years later. I could maybe break even 2 years later, get my money back, but it's been a pain in the butt. And that's where number one, I knew better. I trusted sources, and it wasn't my immediate geography. I really didn't do my due diligence. I trusted someone else's due diligence on those properties. And so I got out over my skis. And that's something that I've seen personally in my own life now, but also in other people that I know who have lost a lot of money.
Yes.
Either while they were practicing, because they had these were like MDs who had cash, or after they had exited, and they just got into like other investments that they didn't know a lot about, and they just thought it would be this cash cow, and they didn't know much about the ins and outs and details of that investment. And so it's one thing to diversify, but like still, yeah, you still have to stay like do what you know instead of what you can. And if you're going to do it if you're going to invest it, it's got to be not only in somebody who's started a private equity fund and has done private equity funds in the past. That's not enough. You got to like know what they're investing in and what those returns are and what the industry is like and what the market's like. And then in that case, maybe just trust your financial advisor instead of these other people that are coming at you for money.
That's good advice. And I think we'll end off right there. So, all right, buddy. I appreciate it. The great Nathan Shields. How do people get a hold of you, Nathan?
Hey, you can always email me, nathan@ppoclub.com. We also have the Facebook group, Private Practice Owners Club. We have the website, ppoclub.com. It's easy to reach out to us and even set up an appointment to talk to us on the website. You can schedule an appointment to talk to us. And we're all about helping owners really gain control of their companies so that they're able to experience profit and freedom. And if they are going to sell, they're selling from a position of power and not from a position of weakness and like, oh, just get me out of here.
Yeah.
Well, you'd rather be selling from a position of, you know what, this thing is making me a ton of money relatively passively. I could sell. I don't have to sell. But if you're going to buy it, you're going to pay a lot.
Yeah.
And be in that position versus, oh, can you just take it off my hands? So that's our whole goal, is to help owners get to that point.
Beautiful. All right. And I can, you guys put on great events, and I can't wait to see what you guys do the next year. So thanks so much, Nathan.